Alright, welcome everyone. Um, I've been a little busy for a while, so this will be my first video in like 2 weeks thereabout. Alright, so today, since I've been gone for a while, I said it's time I drop something. Now, for today, we're going to be talking about when exactly should we be trading. There's one thing that I've noticed that people get wrong is that let me not say people, let me say traders. Traders get wrong is that they usually look in to start trading from any point entirely. And when it comes to trading, exactly, or should I say, when it comes to trading as an SMC or liquidity trader, there are two things that you usually wait for. You either wait for price to be somewhere to take out a high, to take out a low before you trade. So why? Because you want to know your range, you want to know exactly where you want to trade into. It's just like having a structure like this. Once you've had something like this, right, you already know exactly what you want to do next, which is you are going to wait, especially when this is on the higher time frame. You're going to wait until what price comes down, pulls down, and then gives you a certain confirmation or takes out an internal high there. Then obviously you follow the internal liquidity to where to the next external liquidity, which is like this, and so on and so on. So the same thing, this is what you are likely to be following and the same format. Now that's just exactly what I'm talking about. So what I'm saying is that you have to wait for price to get to a certain point before you follow up. You can't just, as price is buying up like this, in this impulse move, you can't just say you want to start buying from here. No, that's entirely wrong. Because you buying from there makes no sense as to you being an SMC or a liquidity trader. All right, so now if we decide that let's go to the chart, right? Let's look at the chart. This is gold. I'm gonna use gold because I know that plenty people like trading gold and it's like a very intoxicating pair, right? Now let's begin with somewhere here. Or we'll begin with whatever price has given us at first here. Now this is the 4-hour time frame. This is 4-hour time frame. Now, dealing with the 4-hour time frame, it comes to understanding that there are certain highs and certain lows that have to be taken out before you take any action on price. Now, the first thing you take note of is this. You take note of what price created a low here. Now, remember this impulse move entirely. This entire move. Yes, there are certain traders that can trade inside this entire move that happened here. But mostly for SMC and liquidity traders, this is not a move that you could trade inside, except you cut it from this bottom end here, which I did. Except you cut it from this bottom end here, there is no point in you following or trying to catch from here. Why? Because price is already in creating a new high. So you don't know where the high is going to end. Hence the reason why you wait. Right? You wait. I'll get back to that one. Let's explain this one finish. Now, when you see price do something like this, it created what? This is the first high, right? It created that. The next thing that price did was what? It created what? Created this high and then give us another low. So obviously we have what? We have like a break of structure here, right? We have a sort of mini break of structure there. And when this sort of break of structure happens, the next thing you do is to just mark it up. Now you know what you're already doing. You're not trying to change the entire trend from uptrend to downtrend. What you are doing is that you are targeting where this low. This is just what you are doing because this is the range that price has given you from this high to this low. Now the next thing is that there was rather a bearish fair value gap inside here, right? Now, inside this bearish fair value gap, we had our candle do this. We had the bearish confirmation candle do this, right? So that has already given us our signature that what we want to sell. Now that has given us our signature that what we want to sell. Now you can come here and choose to sell from here, which will be following the system and all of that. But now price did whatever it wants to do and then stopped out. Rather, should I say stop me out? After stopping me out, the next thing it did was that it showed me a confirmation for what? For the buyers to come in. That's what it just did entirely. Now, how did it give me this confirmation for the buyers to come in? It gave me the confirmation, hence, after stopping me out. Now, take note rather. After stopping me out, it created a new what? A new high. Remember, this is like a break of structure inside. After stopping me out, it created a new high. How did the next candle close? The next candle was closed inside this high, which is giving us a what? It was an invalid high. So meaning that what? This low is not valid as well. Now this low was taken out. After this low was taken out, what did price do? Price closed as what? A bullish candle next after taking out what? The low. All right. Now we have seen that what? Our bullish sentiment has started coming in. Then we wait until a perfect time like this, 6 o'clock on Friday, which is the 6 o'clock candle closed. And then what do we have? We had that what? The candle closed as what? A bullish candle. And has it touched our range yet? No, it has not tampered with this high. So meaning that what? Meaning that what? We can have what? Our buyers come in. Now from the 6 o'clock candle, this is where we had it. From 6 to there about 10. Now you can see that what the confirmation price has given us. Confirmation for sorry, the confirmation for the entries here that price has taken here outright. All right. Now that price has taken it out, what do? We go to look for our other block, which is like the last buy candle, sorry, the last sell candle for buying insinuations, and then taking it from here. Usually our objective target is here, but because I only look for 1 to 4 hours for every trade, this is where I had been, and this was how I caught this particular one. Now, I hope you all understand where I came with these two setups. Now, if we continue going down to the last one I talked about, let me go back to the 4-hour time frame so you can understand exactly what I was talking about. Now, take a look of this, or should I say, take a look at this. Price give us what? A break of structure here, which is price has tampered with what? The high here. After price tampering with this high, yes, price tampered with the high. The next thing that we're expecting is for price to pull down, which price pulled in here, and what? Take out the next high. Obviously, price did that. After taking out the high, it closed as what? A bearish candle. Okay, it closed as a bearish candle. Now the next candle is bullish, right? So it has given us something like this. After giving us the break of structure, it has given us what? Our range from the high to the low. So obviously the next thing is to look for a bearish candle that comes here and follow the supply from there to the next what? To the external range again. And that's just exactly what we're looking for. And we looked for it until this point whereby price took the low out. After price taking out this low, follow me carefully. After price took out the low, the next thing that price did was it came in again. This is the high that created this low. Remember, even if candlesticks are small and they don't give you the full shot entirely, they leave clues behind themselves. They leave clues behind themselves. So this is the high. The peak of this low candle is the high that created what? It's the high that created this new low. After it created this low, it closed like this, closing inside the range and give us what? A different gave us entirely a bullish candle or bearish candle next. And this bearish candle, what did it do? It took out what? It took out this high here. After taking out this high, what has it do? Did it close above the high? No, it did not. So obviously, what is that? This low is what? A weak low. What is it? This low is obviously a weak low. Now, if you look inside here, you maybe or thereabouts see a supply level to what? To target what? This low. Now, after price broke off this low, what did price do next? It did not close outside the range. It did what? It closed inside the range entirely. And the subsequent candles that followed closed inside the range. As long as they are inside the range, we are looking for what? A bullish candle to emerge. And now this bullish candle came up perfectly last week Friday. Now, as it occurred last week Friday, the next thing we do is to go out to a 30 minutes time frame to look for what the demand that followed up with such. And then that's where we had this come in. This came in, and this was how we were able to catch this one in particular. Taking our entries from here, placing our stops below the low there, and then targeting what? Targeting the external here. Like I said, I usually place it at 1 to 4. So this is where it targets the external high and such. And now this is how we cut this one, this loss, and this one here. Now, I hope with this explanation I've been able to push out that price moves from one leg to the other leg. You don't just enter in the middle of anywhere. You must wait until the price has done has taken out a particular level in order for it to follow up again. You don't just look for an entry whereby price is still creating what? A new high. As price is creating this new high, you don't look for entry. You wait until price has done, until price has weakened himself, and then you follow up with such. This is how you find entry, especially as an SMC or as a liquidity trader. This is just how you do it. Now, this is for gold from like since Friday past week till present week. Now, let me show you something on Euro USD. Euro USD has been giving us the same practical terms and the same practical examples, whereby we are looking at price doing what? Taking out a particular level and then giving us entry to aim another level. That is just what we have been doing for a long while now. Like now, you can't tell me that in between this move now, you're just looking for somewhere to enter in between this move. No, you have to wait until price is somewhere. Because as you are seeing, you can see that price gave what? A valid break of structure here. So now what we'll do is that we're likely to wait until price gets into this fair value gap, and then it gives us maybe a bearish candle and follow the supply to this external low. Something like this, and we follow in such format and continue doing as such. Now, this is just all I'm going to explain for now. If you need more, or perhaps you don't understand, just join the Telegram. More insights will be dropped on the Telegram group. And have a blessed day. More to come.